Managing your credit is critical to your financial stability and creation of wealth. Stay tuned until the end. I'll share with you a story about a client who has increased her net worth by $210,000 in the last 4 years, and credit had a lot to do with it. In this video, I'd like to share with you practical tips that'll help you manage and increase your credit scores. Let's start with, there are three main bureaus that actually report credit scores. There's Experian, Equifax, and TransUnion. Data is fed into those bureaus from creditors on a daily basis. And so I like to often say that credit is like a living, breathing animal because information is coming in daily, and depending on what day your credit is pulled, could be different from the following day. Tip number one, pay your bills on time and online. You can set up minimum payments with your bank, and that way you will not accidentally miss a payment. Let's start with if you do not have credit scores. It's relatively easy to establish credit. One really good way would be to get a shared secured credit card. You can actually work with credit unions. They're very good at this. What you do is you establish an account and deposit about $500 in there, and then just use it for consumables. And then as they're reporting to the bureaus, you are actually increasing or establishing credit. Another way would be to open up an account with a major institution like Visa or MasterCard for like $500. For the first 30 days, do not charge on it. And if you were to pull credit after those 30 days, you will have credit scores. And I've seen some in the 700 range. Now, don't open up with your department stores or gas station type cards. They're notorious for reporting wrong information to the bureaus, and that really can put you into a little bit of a debt trap. Another tip is balance management. The bureaus, at the bureau level, the algorithms are looking at your balances compared to your credit limit. And there's two thresholds that you would want to be aware of. One is at a 30% mark. So let's say you have a credit limit of $10,000. You want to keep that below $3,000 on any given month. The next threshold is 50%. So anytime you're exceeding that 50% mark, that is actually counting against you in your credit score. So try to keep it at 30% or less. That'll keep your scores at a higher level. Another strategy is rolling over balances each month. Usage is very important to your credit scores. So what they like to see is, let's say you have, you use $2,000 in a month, and some people like to just go ahead and pay that off each month. Well, that does not reflect necessarily usage of credit. So what I suggest to people is that, let's say you have a $2,000 balance, pay off and leave about $20 on it. That way it rolls over, and that satisfies that usage criteria that the bureaus are looking for. Credit history is another one. So if you have credit cards that you've had for 5-10 years, but you don't want to use them anymore, provided they don't have annual fees, don't close them out. Some people think, it's in their best interest to pay off all their debt and close all their credit cards. If you do that, you're actually closing out your credit history, and that's going to work against you. So if at all possible, keep your cards open, again, provided that there's no annual fees. Maybe use them periodically and pay them down, pay them off as you see fit. But length of credit history is important to higher credit scores as well. Something else for you to be aware of is something in the industry called trigger leads. So I'm in mortgage lending. And so when we go to pull one's credit, right now there's these things called trigger leads. It's not something we're fans of, but the credit bureaus at the bureau level are actually selling these leads to mortgage brokers, usually buy these. And so we are seeing right now a high propensity of these leads being sold. So when somebody gets their credit pulled, they're getting 50, 60, 100 calls in a day, and it can be extremely annoying. So our suggestion is there is a link, prescreenopt-out.com. You can actually go on there and opt out from being called. Also, I believe mail as well, junk mail, it'll cut down on that. I'll leave a link to that website. So if you'd like to go ahead and sign up for it, it may be a real good idea for you. In mortgage lending, as I'd mentioned, we pull credit. And one of the really cool tools we have is something called Wayfinder. What Wayfinder is a tool, an automated tool that once we pull credit, we can run you through that system, and it'll give us steps based on percentages like 70, 80, 90% chance. If you do certain things when credit is pulled in the future, your scores will be higher. It's a great tool. So we help a lot of clients who maybe don't qualify for a loan today, but within 30 days, they do. Fannie Mae is an institution that I'm sure many of you have heard of. They actually have an interesting guideline where if we have two borrowers and one of them does not have a credit score, if the other borrower has 50% or more in income, we can actually, and we get an automated approval, that second borrower doesn't necessarily need credit scores. So that's a nice avenue to explore as well. And I'll round this out. I shared with you, there was a client that is sitting on or has increased their net worth by $210,000. And the way that happened was actually she and her husband came to us. We took an application on her, and her husband had credit scores, but she did not. And we were doing down payment assistance for her. They needed that help. Unfortunately, most, if not all, the down payment assistance programs require credit scores, and she didn't have any. So we ran her through our Wayfinder system, and it suggested that she open up a major institution credit card, Visa, and put at least a $500 limit on it, and to wait 30 days, not to charge on it. We did all that, and sure enough, we had over 700 credit scores a little over 30 days later. And within 90 days, she was in contract to buy her home, and they closed on it. And that property, that was a little over 4 years ago, that property is now has $210,000 in equity. And that's kind of life-changing. You know, had they not been able to qualify for that mortgage, they would not have bought the home, and they wouldn't have that equity position they do today. And I'll end this with, if you like this information, please do me a favor, go ahead and like, share, and subscribe for more home buying tips. Thank you and have a great day.